Hi guys, and welcome to our weekly focus video. And this week is going to be a bit different because I'm going to look at price as it is. I'm going to do a naked chart reading on dollar index. The reason why I'm doing this, you already have most of the levels that we are looking at regarding dollar index. You already have your premium and discount areas noted on the monthly, weekly and daily charts. But what I'm gonna do, I'm gonna start from the monthly to H4, taking note of the obvious PD areas that we need to look at in the weeks to come. So the reason why I've decided to do it in such a manner is because of what we have on the calendar this week. So as you all know, we've got FOMC coming up on Wednesday. We've got the Federal Reserve FOMC meeting. That is the reason why I'm going to do a proper top-down analysis without a clear, definitive bias. I'm going to give you levels that you have to look out for once we have this high impact news released. So we got a couple of central banks also during this week, almost like 10 central banks that are on the calendar, but I'm only gonna note the most important ones that we have to take note of. So Monday as it is, it's gone. We still have CAD. We've got Canadian federal elections coming up in like 11 minutes for those who are in CAD positions. Then on Tuesday, we've got the RBA, the first bank already, central bank. We've got the RBA meetings on Tuesday. That's early in the morning. And then during the day, we've got building permits, housing stats for the United States dollar, right? And then Wednesday, we have got Bank of Japan on the calendar. We've got the interest rate for Bank of Japan on Wednesday. And then we've got existing home sales also on Wednesday for the United States dollar. And we've got the crude oil inventories. That's on Wednesday. You see, all these fundamentals come right before FOMC. Now this one is the most important fundamental that we have to take note of in this very week. So I would advise that you exercise caution when you're trading. Exercise caution in the market because you don't want to get caught on the wrong side with this fundamental. Then Thursday we've got Central Bank of Switzerland. They've got their monetary policy also. And then we've got PMI number, service PMI for the pound. Right, regarding the pound, before I go to the Bank of England interest rate, since last week, I've been telling you guys on the group, the COT number that we saw from last week, when I said pound is going to be under huge pressure. If we go to the chart quickly, and we come to pound daily, you can see how pound has traded since last week. Pound has dropped close to 200 pips in the last 3 trading days. Now remember, the COT report comes out on Tuesday, but we only get access to it on Friday. The COT number that we got last week should have given you today's range. You should have been expecting that drop. That was by default. You didn't even have to think about that. It was already under huge pressure if you look at last week's number and this week's number. Then also on Thursday, regarding the calendar now, we also have Bank of England, their interest rate decision. So whatever we get from the Fed in most cases determine what we can expect from these other central banks. Then we also have core retail sales for the Canadian dollar. Then Friday we'll wrap it up with the ECB. She'll be speaking, Lane. And then we also have Powell speaking. That's like 4 o'clock. That's New York open. So these are some of the fundamentals that you have to be critical about. You must know when you get into your positions where you are in terms of levels. Where are you in terms of price action, and what do the fundamentals say? What are they saying? You see, you should be in a position to interpret that. So now we are going to look at dollar index, right? I'm going to do a top-down structure breakdown and highlight the levels that I'm going to be watching, whether we get more evidence that the Federal Reserve is going to start tapering, or we're not going to get none. I will have levels highlighted that I'll be looking out for. So before we start highlighting our PD arrays, before we start doing our institutional analysis, let's look at the COT report. So yeah, don't mind the colorfulness of my chart. I already have a reference point to each and every color, so I'll know what the color means. So our main focus is right here. Our focus is on the commercials, these guys. This is our main focus, the guys that hedge against the non-commercials, right? As you can see, right, for the past from 27th of July, the commercials, they've been increasing their what? Their short exposure. The commercials have been increasing their short exposure, and their long exposure has stayed roughly almost the same. They only went high as far as 2000. That was on the 31st of August. Now, when we look at the chart's price action, yes, they're increasing their short exposure, but did we see dollar trade lower? Not really by much, right? Not really by much. We haven't seen dollar trading lower that much. In fact, dollar has rallied quite big since end of July. Yes, we had some drops to the downside, but since July, so this is September, August, and then July. Since the end of July, we had dollar moving to the upside. It has been bullish. Now, looking at the COT number, what do we come out with in terms of what to anticipate, right? If you're in the mentorship group, you already know that besides last week, besides the movement in price from Thursday and Friday of last week, the previous 5 weeks, we were seeing dollar trading lower Wednesday, Thursday, and Friday. We were seeing dollar trading lower. So every last 3 days, that is Wednesday, Thursday, and Friday, of the previous 6 weeks, besides last week, dollar has been trading lower. Basically, it was fulfilling what the COT number had told us. We were seeing the high of the week coming in either Tuesday or Wednesday, and then after that, it was going to the downside, meaning the short exposure which the commercials were showing us has been fulfilled. They were fulfilling the short exposure that we saw from the commercials. The non-commercials didn't have much emphasis. They didn't have much momentum to keep pushing price to the upside. As you can see, the non-commercials, their long exposure hasn't changed much since the 27th of July. But if you look at the commercials, they've been increasing their short exposure. Now, why am I telling you this? Now, we've got FOMC coming, right? Already your anticipatory skills, your price action reading skills, your forecasting of the following day's range, you should know already. You should have levels that you look at in terms of price action. So if we have 32,213 short exposure on the commercials, then we only have 1,219. They've actually taken profit on their long exposure and they added more shorts. Now, when we come to the chart, what do we expect to see, right? Heading into FOMC, I would expect the dollar to trade to the upside, right? Then the only thing that can keep pushing dollar to the upside, number one, is if Powell gives us a definitive answer to the Federal Reserve tapering program. If he definitely says they are going to be tapering by end of this year, then we should see dollar rally to the upside. But if he mumbles, if he talks like the last FOMC, where he didn't give anyone a clear signal that the Federal Reserve is going to start tapering, then we are going to see dollar trade lower. We're going to see huge weakness coming into dollar index. Now, so with the COT report, I'll be expecting, with the number that we got, we still have a huge exposure to the downside on dollar index, right? Open interest hasn't jumped that much. Now you can see I've already spent almost like 10 minutes just telling you what I anticipate the dollar to do based on fundamentals. Because remember, fundamentals, they're also crucial. They fulfill what your technical chart is telling you. So now, once I have that framework inside, once I have the COT number, once I have the calendar in place and what time each and every fundamental is going to come out, then I will go to the chart. Now, in regard to our current class for September, where we are talking about top-down analysis, if and then conditions, this outlook is going to illustrate some of those criteria that we are talking about in class. So we're going to start from the monthly, right? So this is our monthly chart, and we can clearly see, notably, we've got this last down close candle, which is our bullish order block, right? This is our bullish order block, and we've got our equilibrium point right there. This is our monthly bullish order block. It's definitive, it's there on the chart, right? No, there's not even a need for that 9 to 18 month profile. Of course, once we get to a premium or discount array, which is in our 9 to 18 month period, then we have to consider it. But as of now, we can see how price has left the 90.50 level. Price dropped, found support right here in this down candle, and rallied all the way, all the time, from this low to this low. Price to this higher low, price is moving to the upside, right? Basically, price is in an uptrend, reading our market structure. Remember, now we have got price which took out this high. Now that was distribution. We say now weight becomes crucial. This is distribution. We had distribution here, then price pushed to the downside. Now look at the current month is high. The current month is high is coming in at 93.440. The high of this candle is 93.460. Just a few pips. Just a few pips to have an equal high. Now, what does this tell us? Do we still expect price to trade above 93 93,740. It's highly likely. It's highly likely that we're gonna see price trade above 93,740. Now, what do? You get your drawing tool. You highlight that price point because it's crucial. 93,740. 93,740 becomes your crucial price point. Let me just mark it out perfectly. Right, so you must take note of that price action when we get to lower time frames. Now, when we look at the downside, right, when we look at it from a lower price point, we can see we've got what? A fair value gap right here. We got this fair value gap on the monthly chart. This level becomes crucial if we get weakness from the FOMC. If we get signs that they are not yet ready to start their taper program, that fair value gap becomes crucial for your targets for weakness in dollar. You see, that's how you do your price chart reading, folks. You can see this is our last down candle because before there are two bullish moves that we've got on the monthly chart. Now we can see the low of this candle here is coming in at 91765. So this is where you want this line to be. So that's 91765. Now this becomes your discount target if you're gonna sell. If we get further signs that dollar is going to be weak, this becomes target from the current price levels. So you can see already we've got a range. We've got a range in price action where we should anticipate what? Price to play around in. Now, in this price range, we've got our premium and discount arrays. You see what I've done there? I've just mapped out my monthly range. Already, we've got September. We're going into the last week of September. And this would have been the range beginning of the month. That would have been the range, right? Where you'd have been expecting price to what? To rally to the upside. Now, once you have done this on the monthly chart, other levels that you need to take note of, especially on the monthly chart, is these levels here. We've got one, this high. We've got this high and this high right here. Why do you have to take note of those? Because they are old highs. What resides above old highs? We've got buy stops, right? We've got buy stops above for the short term target. We've got buy stops above 93,740, right? And we've got sell stops below 91.765, right? Now this is our monthly institutional analysis. We've highlighted the obvious. Of course, we've got another fair value gap here, but that's a long-term target. Once we break above 94.30, this becomes your long-term target in terms of strength on dollar index, right? This becomes your target. You'll be looking at 95.30, right? But for now, it's out of context at the moment. We still have a long way to go to 95. So once you have highlighted your monthly range, right, you can see already our monthly range is approximately 200 pips, and we are way high into the range. Meaning, what does this mean? If you're in the mentorship, you know already you have to apply your trading in the range criteria. Now I'm gonna go to the weekly chart. right? Now on the weekly chart, what is it am I looking for? Now look at 93740. Do you anticipate that we should see price trading above 93.740? From my point of view, yes, we should see price trading above 93.740. We've got quite a liquidity pool there of buy stops, right? Already we had accumulation, we had distribution, we had distribution here. Now if we trade right above this level again prior to FOMC, then expect price to even trade higher than 94.316. Expect price to retest that level. But if we only trade above 93.740 and close below, then expect huge weakness to come back into dollar index. But that's dependent on what FOMC would have delivered. But Ivan, prior to FOMC, what is it that I should look out for in terms of price? Tomorrow is Tuesday. What is it that I should look for? Expect dollar to trade to the upside and expect majors to be under huge pressure. Majors, which ones to be particular? Pound, euro, Aussie dollar. Expect those majors to be under huge, immense pressure, selling off, especially the pound, guys. Easy pips on the pound, which I've been telling you guys on the group. Easy pips to the downside. Now on the weekly chart, what is it of significance that we had? Right, we've got this last up candle here, right, which traded into this bearish order block. Stop hunt, buy stops above. I remember I highlighted this on H4, stops above, and then we traded lower, but we didn't get much move to the downside. You can see we've got an uptrend there. We've got an uptrend. Price is moving in the upside, so expect price to move to the upside to take out the buy stops. Buy stops above 93.74. Yes, it might be a small move, but 56 pips is not a small move. This move to the upside, when you look at the majors, Aussie dollar, New Zealand dollar, pound USD, euro USD, you're gonna get in excess of more than 150 pips on those pairs. So on the weekly chart, we can see our market structure is pointing to the upside. The week has just opened now. We've got Monday's range, which eventually determines what to expect in the week regarding what? Your asset that you are trading, which is dollar index in this case. So this is our weekly range, our monthly range, sorry. Once you have this highlighted now on the daily, you can see this is our last down close candle. This becomes your target for weakness, right? You already have targets for strength. That is the old highs, 94.32, 93.740. These are your targets for strength. This bullish order block here is your target for weakness in dollar. This is your target for weakness in dollar. That's 92.54, which then equates to 92.50. all right, 92.50. remember, that's a very strong pivot in terms of price action for dollar index. So I'll be anticipating, I'm expecting dollar to do something like this prior to FOMC. During FOMC, then we might see price flash to the downside. That is on negative sentiments from Powell. But if we do get positive sentiments regarding their taper program, regarding what they're now focusing, when do they anticipate to increase their rates? Prior to FOMC, I'm expecting price to trade lower, and then eventually we rally to the upside. Now, what's important, guys? What is really important is the levels that you have to be looking at. Now, I've already given you the targets. Now, tomorrow is Tuesday, right? Now, on Tuesday, if we do get price, right? So this is daily. On Tuesday, if we get lower moves to the downside, we've got this fair value gap here, right? We've got a fair value gap to the downside. If we are going to have strength coming into dollar index, I'll be expecting tomorrow to trade lower to fill up this fair value gap and ultimately trade lower and fill up this imbalance right here, right? We've got market inefficiency. We've got market inefficiency right there. Right, let me mark out the targets. I'm going to give this a different shade. I'm going to give it a blue big shaded line. Now remember, this is your entries to the upside where you anticipate price to go higher, right? So I'll be expecting price to trade lower end, then go to the upside, or further weakness coming in prior to FOMC and then go to the upside. So you can see I've already given you two entry targets for strength in dollar prior to FOMC. Now remember, you have to be in control. You must know your risk. Don't go all out bang on price on your lot size, because this event is very volatile, so you don't want to get caught on the wrong side. In terms of weakness in dollar, we need to see price taking out the buy stops above 93.740 and close below, right? If we get Tuesday sniff at least 93.740, maybe not even trade above, then during FOMC, make sure you understand what they're saying. I'll be on the group sending you updates regarding the current price action in relation to the fundamentals, so that you know what to do. Fundamentals are very important, especially the ones we have this week. They are very important, guys, because they're going to determine what we're going to be doing prior to almost until the end of the year, of which it's only 2 months now, 2 months left. December, it's not much of a month that I look at definitive price action, because a lot happens during December. So I'm gonna go to the H4 now. Right now on H4, you can already see 93.050. right? We had this breaker here, that's our liquidity void. I'll be anticipating price to find support. Price is not just gonna blast through there. And then also here, 92.740. If we get a weaker dollar, this could be your discount targets and also your long entries after FOMC. So you can see already I've given you clear price points that you have to look at once we get to the events. But prior to events, see how price behaves, see how price trades, see how IPDA delivers price in relation to those levels that I've marked. You see, we have already taken off from this 92.30. Remember 92.30 from previous week that we got our long entries from here. So we have already taken off, and I don't see a reason why we should come back lower. Only on dollar weakness, then we should see price retesting 92.50, but that's only because of FOMC. That's the only way we're gonna go to that price point. But other than that, I'll be expecting dollar to trade to the upside. So yeah, that's pretty much about it regarding the forecast for dollar. So in the coming days, that's Tuesday, Wednesday, and Thursday, I'll be giving you guys updates on the group regarding what dollar is doing. Then you have to apply that now to the currencies. You already know what to do on Euro USD and Pound USD, or Aussie dollar, New Zealand dollar, USD CAD, USD CHF, USD JPY. You already know what to do, right? So I don't need to go further. I need you guys to do your homework. I need you to put in your own effort. So yeah, with that, I think that concludes the top-down analysis on Euro USD. I would say I'm 65% to the upside on dollar, though we should see a bit of a jittery in the markets because there's a lot going on, guys, and you need to be well aware of those fundamentals. So yeah, if you're not in the mentorship group, guys, unfortunately you're only gonna see this video probably after FOMC. That's when I'll only put it on the public domain for YouTube. So if you want to get these weekly forecast videos to your inbox straight, just give us a message or subscribe to the channel, and make sure you've got the notification icon selected. And if you want to receive the forecast Monday before New York close, then just send us an email or message on any of our platforms, then we can definitely get back to you. So yeah, that's pretty much about it, folks, and I just hope you guys here are doing your chat hours properly. And if you have any questions, you know how to reach for me. It's unfortunate the past 2 weeks I haven't been well, guys. The tooth that was removed, the wound was quite big, so I couldn't talk properly. So yeah, that's pretty much about it, guys, and I really wish you good luck and happy trading this week. Thank you.